Happy New Year, everyone. This is Corey Mitchell with TradeThatSwing.com, and this is your swing trading stock market outlook for the week of January 2nd. Just a reminder that due to New Year's Day, the stock market is closed on January 1st, so the first trading day of the year is January 2nd. Each week I go through the same process, just looking at overall market conditions and a few other things here to give me a sense of whether I want to be deploying capital on the long side or short side and how aggressively. Heading into the week of January 2nd, conditions are still good. I'm deploying capital on long trades. For trade ideas, or at least what I'm looking at, there's the best swing trading stocks list. This is two lists, very strong stocks and very weak stocks, so just high momentum. Current stocks watch list is stocks that have actually formed specific patterns that I like to watch for. This has not been updated in a couple weeks just due to Christmas and New Year's, so I'll be doing an update on this probably early in the week, possibly before the Tuesday open. Best performing ETFs and best performing stocks, just things that have been running over different time frames. And for a little bit longer term stuff, we can look at buy the dip stock list, buy and hold stock list, best long-term dividend stocks. So lots of options. And let's get to the price action analysis. And I'm looking at a few different markets here. We have the NASDAQ up here, the S&P 500, the NYSE, very broad measure of basically all stocks listed on the New York Stock Exchange. These small caps. Then we have the Canadian market, Bitcoin, gold, or silver and gold, just because they're in some interesting points. So if we go back to November, we have a very strong uptrend. I don't get bogged down looking at too much price action. Just, are we in an uptrend right now? And that basically determines whether I'm buying or selling or not. And we are in an uptrend on all of these. We have run higher. And so at least at the moment, things are okay. I'm willing to deploy capital. What I like about my strategy is that I set these levels, and if the price moves above it, I buy. So if we were to get a correction, then you typically don't get trade signals to jump in. So that's why if you watch these videos regularly, I'm not really much for predicting where price is going to be or where is it going to be in the next month or two. We analyze current conditions. If it's good, we place orders, and they're more likely to get triggered if prices rise. If conditions are good and we place orders and then the market starts to fall, those orders are less likely to get triggered. So we can just wait out the decline, and then as prices start to improve, we put out our orders again. If price keeps going up, our orders get filled. S&P 500, the TSX S&P index. This is Canadian stocks, also in a strong run. Bitcoin, very strong run, getting a bit of a consolidation here, but overall, very strong movement throughout the year. Gold is on here. Silver is not as interesting to me, but gold, this is a 2-week chart. So every bar is 2 weeks. This is showing a long period of time, going back to 2020 peak. And then we had a decline. We kind of came back. Then we had a lower decline into 2022. And we've rallied back, and we're sitting right at this multi-year, basically inverse head and shoulders type pattern. You could think of it as a rounded bottom type pattern. And I don't want to be the first one into this trade. This thing's been chopping sideways for years. There might be some short-term trading opportunities, but kind of just as a long-term thing I'm watching, and that could also translate to swing trading, because if gold breaks out, that trend could last a couple years or more. So that's going to provide us with swing trading opportunities along the way. So I don't need to be the first one in here, whether you're thinking long-term or shorter term swing trades. I want to see this break out and start running, and then that's going to provide some opportunities. So just kind of something that I'm watching in the back of my mind. Like I said, not really doing too much with this at the moment. Silver, a little bit weaker. I'd like to see silver stronger. That would help confirm a breakout in gold if it were to run. But my guess is that if gold starts running, silver will follow as well. But again, no need to predict that. We'll see if it actually happens. The market health indicators. This is basically the underlying strength, which maybe the indices don't necessarily show. We have strong price runs, as we were discussing. This is how many stocks are above their 50-day moving average. 50-day moving average, just a very crude measure of an uptrend or downtrend. So right now, 89% of S&P 500 stocks are above their 50-day moving average. Very strong movement. 85% of all U.S. stocks above their 50-day moving average. So pretty much most stocks moving up. I find it much easier to make money when most stocks are moving up. So when this indicator is above 50. And we can see that during periods when it's below, you tend to get choppy, like over here, choppy trading or down trading. So if I like to focus on these areas, being aggressive during these times and then staying out when it's marginal or below 50. Or those are times you possibly look at shorting when we're below 50. Volume, not super important to me at the moment. This is the daily average movement of the S&P 500. Uptrends are categorized by lower volatility daily movement, and mainly I look at minus 2% drops on a single day. We have not had any of those in a long time, going back to March of earlier this year, 2023. So still categorize, I would still categorize this as a bull market based on volatility. If you look back here, 2022, when we were declining, you can see way more volatility, big daily price moves, routinely having minus 2% drops, just showing people want to dump whatever they can. And then you notice this type of movement over here, much lower volatility and associated with rising prices. Pretty quiet in here, and the market just kind of melts up. The advanced decline line, advancing stocks minus declining stocks as a cumulative number, and it is just running away to all-time highs, as is the S&P 500. Or at least based on what we can see on this chart, just passing prior swing highs and nice strong up moves. So that is confirming. And upside volume versus total volume. This is, I just want to actually see. We're very close on the S&P 500. I know we've passed it when we include dividends, but I just wanted to look if we are. Just pull up SPY. 1 second here. And yeah, are we close to all-time highs? Yeah, getting pretty much right there. The 2021 high or 2022, just as we started that decline. Yes, we're very close. And if we do, if we included dividends, we are well above it. But just on a strictly price action basis, yeah, closing in on those all-time highs. So that 2022 decline has been pretty much erased. And this is up volume divided by total volume. Just shows how much enthusiasm there is in the market. And we have had multiple 90% upside days. That means of all the volume that occurred in a day, 90% of it occurred in stocks that moved up on the day. A very strong, means just lots of enthusiasm on the part of the buyers. Good to see. And we have had plenty of those, including one here on December 21st, a 90% upside day. And they're not as important to me at this point in time. I like to see them after we've had a decline like this one. Once you start to see the 90% upside days during the decline, that often signals that the bottom is very close to being in, usually within about a week. So all happy faces, all doing very well at the moment. That doesn't mean that we're going to continue running higher. As I said, I do not predict the market. I just look at how current conditions are, and that determines how aggressive I want to be. I haven't done too much trading the past week, just with the holidays, past couple weeks. There weren't many setups coming into Christmas that I saw, but the setups that were going before, including some earnings trades and all those types of things, the contraction patterns, rounded bottoms, everything still was moving good, and we can see that just based on the S&P the last couple weeks. A little bit choppier, but still overall pushing higher for most stocks, so that was encouraging to see. Real quickly, let's look at this. People always wonder, New Year, how's January going to be? December was pretty good. November was pretty good. January, a bit of a iffier month. It's not great, but that's relative to other months. In and of itself, it's not a horrible month, but we just have other months that are much stronger. January tends to be one of the weakest months of the year, both in terms of how often it increases. So this number here, this is the NYSE composite, so a wide basket of stocks. Over the last 20 years, it's only increased in January 50% of the time. So 10 years, it's dropped. 10 years, it's gone up. Average return, minus 0.1%. So kind of a flattish month. It's basically kind of a coin flip whether it's going to go up. Whereas some other months, as you get more into March, April, July, some of these other months have much stronger biases to the upside. And if we look at the S&P 500, same thing, 50% upside over the last 20 years. It's increased in January 50% of the time. Average return only 0.1%. So again, we're seeing that kind of coin flip for January, kind of a mediocre month. And then as we get into the next several months, conditions generally improve. So just a little bit extra tidbit there. I mainly just focus on the price action and what this weekly outlook. If conditions are good, I'm putting out orders. Pretty much everything's strong in terms of sectors. If we look at the month and the 3 month, a couple little things, energy in the minus over 3 months, a couple little things in the minus over the last week. But overall, pretty much everything just running to the upside. So if you're running your scan list, most things should be doing pretty good if you're looking for strong stocks, which is what I do. Real estate, industrials, basic materials, financial, those seem to be the big ones that are up here in the middle, kind of on all of these time frames, holding up quite well. I noticed healthcare making a bit of a surge here, starting to move up on the monthly, still weak on the 3 month, but making a surge on the shorter time frames. Same with technology, still pretty good overall. It's the top performer over the last 3 months, even though it's struggled a little bit, more the middle of the pack over the last week and the last month. But if you look, I'd also look at the returns, because we can see some of these ones have a little bit bigger returns, but there's not a huge amount of difference between these upper ones. So it's pretty much anything in these upper quadrants doing quite well overall. So just another thing that says, hey, at least right now, market conditions are pretty good. So what am I doing right now? Well, I'm willing to deploy capital in long swing trades. Haven't done much through the holidays, as I mentioned, but I am willing to deploy in the new year if conditions stay good. You can also day trade, swing trade. There's lots of other things that we can do to supplement or create multiple streams of income with trading. We can also actively invest. Some of these lists up here, more about the active investing. And then we also have passive investing, which I have a little book on, which is basically just buying very low cost ETFs, and we buy a little bit each month and just hold those. We don't need to worry about trading in and out of them. So multiple ways to take advantage of the market. I hope you have a great New Year's Day, New Year's Eve, and we will see you in the new year.